Hello, my name is Ty Wilson. I'm the co-founder and CEO of Tab Commerce. This is the Restaurant Finance Podcast. I'm here with John Abdo, CEO of MyBurger.
Hey, happy to be here. Thank you, Ty.
Where are you coming in from today?
So we came in, we're a Minneapolis-based brand, Twin Cities, Midwest. Love it out there.
Nice.
Happy to be in California, though.
Yeah, it's a beautiful scenery. This is an awesome conference. Would love just maybe a quick kind of intro to yourself and MyBurger and just kind of the story, kind of where you're at today in terms of the size, numbers, all that.
Yeah, absolutely. So I'm a Minnesota guy, born and raised. Been there my whole life except for my college years. Inside of a family business, my parents are they're serial entrepreneurs, and they have basically just worked for themselves ever since they graduated from college, got married shortly thereafter. And then with MyBurger, it was a concept that was raised or started out of necessity, actually. My parents were doing a real estate development. Somebody backed out last minute, and they decided, we're going to just come up with our own brand, fill the space and run it or sell it off or whatever we need to do. I got out of college about a year after that, worked in real estate, which was the primary family business. Didn't really enjoy it, wasn't for me. And I said, hey, can I go just ring the register and flip burgers? And they basically just handed me the keys and said, knock yourself out. And that was it.
There you go. And then when did you add on your business card the Chief Burger Enthusiast?
Chief Burger Enthusiast? Yeah, it was like basically when I got a business card, I put that on there.
Yeah.
I started when I was 22. And then I really kind of took over fully running the brand in 2011. And I was 27 years old. Still kind of weird to call myself CEO. Like I wasn't comfortable with it. So having fun, I was just like Chief Burger Enthusiast. And it's still the title on my business card.
I love it.
Yeah.
That's so cool. How has the group evolved? So you mentioned, I guess, how many locations are you at today?
We have 11 now. Likely 2 to 3 more next year in 2027.
Awesome. And what does that look like over those since 2011? Starting with 1, how did that ramp to 11 look like?
So yeah, the original one actually opened in 2004, and then we ran that from 2004. It's still in operation today, downtown Minneapolis, and we kind of had an idea of what it was going to be at the beginning, and it was my parents' vision was more of like a seasonal, summertime only location like the old school Dairy Queens or A&W's. That really is not what we ended up deciding to go forward with. So in 2011, we kind of retooled it, rebranded it, and then opened was our second location then. And we've been, up until the last couple of years, we were just a store every other year, building on our own steam, a little bit of friends and family financing. And then really just when we came out of COVID, thought that there was an opportunity to put the pedal to the metal a little bit and grow from there.
Nice. So a lot of family and friends financing, using cash flows to reinvest and grow the business. My family's the same way. A lot of family and friends reinvesting, opening those new locations. How have you thought about the family and friends you brought in? And like, are they at all in operations, or are they kind of part of the community capital and just kind of close to you? And how have you thought about that?
A lot of it was just strictly relationship based. Right. So we were saying, hey, we're gonna open another location. The first one we just did on our own capital, and it was my parents. So I say we, but as a family. And then when we looked to expand, it was just like people that we knew that were trustworthy of us and our operational expertise. And for the most part, it's been just an extremely patient group. The way that we operate is super transparent about what we're doing and how we're running it. But it's not a dividend play. It's really just equity play. And everybody's been pretty good with that. So we've had a few larger family and friend investment levels, but most of the people are, hey, sounds fun, would love to be a part of it. Some people don't even live in the Twin Cities. They've never actually even visited it. So super fortunate in that regard, but they're rooting for us all along the way.
Awesome. And so you're here, you're pretty kind of on your own. You have your own kind of family and friends group. You have cash flows. You mentioned having some conversations with investors. I guess what's just like, what are you looking to learn and figure out what's happening with these conversations?
Yeah, I think, a conversation about if you're looking for growth capital, growth equity capital, you've got to start it before you need it. That's the true with like bank financing as well. They're there when you don't need them, and then when you really need them, they're not always around. Right. So we always think, let's just get ahead of it and come down to a conference like this. Not only do you meet other operators and see what they're doing, understand what the market looks like for them, whether they're in our segment of fast casual, burgers, or even in our city, which I think we're probably one of the very few from the Twin Cities out here. But then talking to investment partners and seeing what they're looking for so that we can start to benchmark that as we grow, and then hopefully just keep those relationships up. The beginning of a conversation could lead to something 4 or 5 years down the road that really makes sense. And we're fortunate that we've got the opportunity for real patient capital. And as we expand, really a couple of stores, 2, 3 a year, it makes sense for us now. When we get that model built out, and we know that we can build on more than that. It's going to take, it's a brick and mortar business, capitally intensive. We really need to have our ducks in a row. And when we get that, it's, fun to make a phone call and be like, hey, remember when we met 5 years ago? Who would have thought we'd be talking about this today?
Totally. And that presentation to kick it off is all about kind of the fundamentals, the focus on the actual numbers of the store versus getting over your skis.
Yeah.
It sounds like you guys are doing exactly that.
Yeah, that's our charge every single day. Yeah. I'm here with Patrick, who's our VP of Ops. He does a lot more than just operations. Yeah. We drill into that stuff every single day. How we run our business, the people side of it is the major component for us today. If you're not looking out for your people and you're not providing them a great work experience, chances to growth are looking probably not great for you.
Totally. And so you mentioned maybe 2 to 3 stores a year. Is that sort of the next 5-year plan, or what are you thinking of? Do you have targets, or how do you
probably
think about it?
2 to 3 years?
2 to 3 years.
Yeah. I think once we get to the end of 3 years, so I'm looking at 29 or starting to look at 2030, we see ourselves filling out the market in the Twin Cities, saturating that, and then jumping to a secondary market. What we know, I was at RFDC, we were talking about that last year. Proving a concept in a secondary market is huge for any kind of valuation. So they might be like, well, it's your own backyard, you know everybody, you have relationships, but what to work in another Midwestern town or somewhere else in the Twin Cities. So or outside of the Twin Cities. So like Kansas City, for example, might be an interesting market. Milwaukee, Madison, something like that. Yeah. And if we feel like we can grow to those, that's something that's probably just 3 to 5 years out.
Yeah, I think that was a key thing that I took away from that first presentation was if you have these kind of meta numbers, they look one way, and then you break it down by markets. So your home market, great numbers, and then market 2, market 3, you get start to get discounted on that just because maybe the model's not as repeatable. How can we take this to 1,000 stores? So being careful about selecting the next market, obviously, is pretty massive. In terms of the model, all owned, family owned, obviously the investors, but business model, you're going to keep that going forward? Any plans on things like franchising, something like that?
At the time, no. Franchising, you can build a great brand, you can build a big brand using effectively just other people's money and work, which nothing against that. The way that I see it is you move to a franchise model, I'd be selling burger restaurants, and I really just like selling burgers, and that's it. So that's how we're looking at it for today. If there was an exit opportunity down the road, having something that's fully baked and ready to franchise, I think is actually going to really increase the value. Somebody could come along and buy us out, and if they're like, hey, we're going to turn around and do some master franchise agreements, they can get their capital back incredibly quickly if it's ready to go to that level.
It makes perfect sense. Last couple of questions here. So on the sort of financial side of things, how have you thought about your processes internally? So what numbers are you looking at like on a weekly basis? What's the maybe break it down in terms of like your weekly routine for looking at the numbers across the different stores and what you look at and how you kind of look at those over time?
Yeah, I mean, our business is fundamentally, it's 3 things. It's the sales that are coming in the door, and then your prime cost, which is your COGS and your labor. And right now, especially in this market in 2026 so far, COGS have really been a huge focus of ours because there's things in the market that we can't control. The price of gas, the price of the commodities, we're selling burgers. So in beef world, it's highest it's ever been, and it's not looking like there's going to be a reprieve anytime soon from that. So we're trying to make sure that we're making the best decisions without sacrificing on quality. And we're looking at that every single week. I mean, multiple times, seeing where the market is going. We just renegotiated some produce contracts, so that's to our benefit for some like lettuce and tomatoes. Not sexy, but it's going to add to the bottom line. And then labor is being smart about our labor. We're a very hospitality-focused company. And our goal is that when you walk in, you're paying for a $10 burger, but you're going to get like a $100 steakhouse experience. That's really what we want. So we're going to deliver the food to you after you order it. We're going to check on you. We're going to make sure you have everything you want. We're going to thank you repeatedly. And if we're providing that level of experience while being efficient with our labor, we think we can win every day.
Makes perfect sense. And then maybe on the core prime food costs. So obviously you have the beef is obviously a major component of it. How have you thought about your vendor stack, so to speak, about your supply chain? And any tactics you've used there to help kind of maintain your margins?
Yeah, so we switched our primary what's the distributor? Broadline distributor. My goodness, word salad today. And that was within the last year. And we have direct contracts though with the majority of the big stuff that we sell. So beef, buns, ice cream, bacon, French fries, those are all direct contracts. A few of those are coming up for review here. We usually set those up on a once a year schedule, and we're being really aggressive on our negotiation. We don't want to sacrifice quality, but we think that our brand and the growth opportunity and the growth story for somebody that's selling to us should provide us better pricing than we're getting today in a lot of ways. And we owe ourselves that service to get out there for it.
Yeah, I mean, that's super healthy. I think a lot of groups just don't often do that RFP process or look at it once a year, but that's the pressure that really helps keep those costs tight. So thanks. This has been fantastic.
Yeah.
I'll give you maybe the last few seconds here just to kind of share where people can find you in your stores.
Yeah, so we're based in the Twin Cities. If you're flying through MSP, come and see us. A couple of locations close to the airport. You can find us on the socials at MyBurgerUSA, MyBurgerUSA.com, and we'd love to have you in and get you eating a cheeseburger sometime soon.
Perfect. Cool.
Thank you. Appreciate it.